as banks race to meet the April 30th deadline to submit plans for banks' recapitalization. Deloitte believes that upward review of the capital base is essential to boost banks' capital adequacy, which has also been impacted by high inflation and interest rates, currency volatility, and forex illiquidity, among others. Well, Abimbola Ogundare, a partner and Africa corporate finance leader at Deloitte, joins me now live in our Lagos studio to discuss this and much more. Abimbola, thank you so much for joining us on the show today. It's good to catch up. And it's a race, really. Literally now, we're having banks count down just a week away from the deadline here. But let's talk about the rationale behind this upward revision and in terms of the implications here and the capital raise options that these banks have.
Thank you, David. Quite a good point. In terms of what we're seeing in the local market, the CBN came up with the recapitalization circular about a month ago, indicating that banks will need to recapitalize to a tune of 500 billion for international banks, 200 billion for national banks, and 50 billion for regional banks. Those are for deposit money banks. For the merchant banks, the revised capital base is 50 billion. And for non-interest banks as well, they're looking at 10 to 20 billion. Now, focusing on the commercial banks, which is where we see a lot of activity, I'll just talk maybe a little bit about the options that have been given by the central bank. The first option is raise fresh capital. So whether you decide to do that by a public offer, a private placement, is up to you. The second option will be an M&A, so a mergers and acquisitions option.
Yes.
And then the third option would be upgrade or downgrade your license. And I think what we're seeing is a number of the banks having been given the 1 month timeline to come up with their plans, have taken the front burner to say, this is what we're going to do. We've seen the FUGAs, the first tier banks, all come out with a program to raise additional capital. Access Bank, 365 billion.
Fair rights issue.
Fair rights issue, that's correct. GT has come out to say they're raising about 500 billion. You know, and all the others have come out as well. UBA, Zenith have all come out with their different programs. I think what we're then going to see is, you know, how this plays out over the next few months in a race to meet the deadline.
Exactly. And part of the interesting tweaks here is also one of the conversations I had just yesterday, looking at, for example, First Bank of Nigeria now and the dynamics at play here, the resignation and then the appointment of the new acting MD CEO, and also looking at the fact that the EGM was also cancelled, which would have also brought to the table the 300 billion naira capital raise plan here. But in terms of tax considerations for these options, let's talk about that.
No, that's also a very important part, because in keeping with what the plan is for each bank, they have to look at the different ramifications of each plan. Now, there are financial considerations, there are tax considerations, there are also human capital considerations. You asked about the tax considerations. Let's take the options one by one. If you were to go with, for instance, a raise of fresh capital, you would potentially be looking at stamp duties on the incremental capital that's raised. You know, the cost of the capital raise is also one that you would look at. That's usually, you know, non-allowable for tax reasons. But depending on, you know, the program that you go with, you could then engage the advisors further and see what flexibilities there are around that. If you look at the second option, which is the M&A option, you could go either the share route or the asset route. If you went either route, you'd probably be looking at capital gains tax at about 10%. But in addition, if it was a tax sale, depending on the tax written down value of those assets, you would probably be looking at some other exposures, maybe additional CIT, stamp duties perhaps in that regard, VAT, and so forth. And if it was a license upgrade or downgrade, if we take a downgrade, for instance, you would be looking at the same plethora of taxes just across that continuum. but potentially also personal income taxes, because if you're rationalizing your assets, you would scale down the number of banks, the number of bank branches potentially, and the complement of people across the different regions. So quite a lot to unpack in terms of the tax implications.
Definitely. And wrapping up the conversation now, we've also seen quite the build-up of momentum in terms of the highlights of activities, reforms that we've seen the CBN take in anticipation of the Monetary Policy Committee meeting as well. Now, we saw that in February, March, and now this is May as well. Now, this would definitely feature in some shape, form or manner. But as we move forward now, gradually within the realm of the Naira rebounding, and then looking at the print of FX revaluation gains and a whole lot more for the full year numbers, what's the anticipation as we look at Q1 numbers? And if we have this rally strengthen even further by Q2, what sort of picture do you think we would see here, especially on the back of the health of our banks here being healthy enough to lend as well to the real sector of the economy? Because so many conversations have been you can't fight inflation and also simultaneously accelerate growth.
That's a super interesting point, and I think, quite a lot of parameters to look at. So in terms of, a number of releases that we've seen with the banks, in terms of the health, I think, good returns profile, just looking at the asset base of the ones that have released their results recently. So I would say in terms of the returns profile, quite strong comparative to the asset base of those banks. How we see the next MPR meeting going and whether there'll be a rate, upgrade or downgrade is $1 million question. However, just given the trend of monetary policy and what we've seen with FPIs, that is foreign portfolio investments, over the last few weeks, it does appear that the rate environment has helped with shoring up some inflow into the economy. And, from a returns profile, you will need to, as an investor, justify the money that you put into any economy. A 24, 25% benchmark rate is super attractive.
I'd like to put you in a tight corner now. Are you one of those optimists who believes in the central bank governor that would see economic stabilization, moderation begin to manifest by next month? A yes or no?
That's interesting. I am an eternal optimist and a great Nigerian, I would say. Sitting in the space for investments, I would say yes.
Okay.
It's a yes from a prescriptive and an affirmative standpoint. We are already seeing some of those gains start to play out.
Okay.
And if you look at the policy of the direction of the policy, there are the longer tenured policies around recapitalization, but also the shorter ones around what are the benchmark rates, what are the small levers that we can pull, and we're starting to see some of those gains. Okay. Touch wood that they continue.
We'll keep our fingers crossed to see how things pan out. We'll leave the conversation here for now, Abimbola. Thank you so much for your time on the show today. That was Abimbola Ogundare, partner and Africa corporate finance leader at Deloitte.